Okay, ladies and gentlemen. So, the £1 Million Funded Account Challenge. What can we learn from it? What can we take? How can I give you something that you will be able to take with you from this and effectively do it for yourself? The first thing that we've got to accept when you're trading these challenges, you have to approach it in a very different mindset. It's all about knowing that there is a limit. You have to work with the limit that has been given. In this instance, I was only allowed to trade with a limit of 50,000. That's the criteria. So you can do whatever size you want, trade whatever time you want, but you must stay within the loss of 50,000. So if I take a trade and my first trade loses me 30,000, that means I've got $20,000 left risk. Now, that's exactly what had happened. I took a trade right here at the start, which was at 5:15 in the evening, UK time, when I started the challenge. So I got the challenge, purchased it, and started trading straight away. And I took my balance all the way down to 59,000. So it was 959,000. That meant that I had lost 3%, so 30,000 of the balance. Now I'm in a drawdown of 20,000 now, in the sense where I've got only 20,000 left to really work with. And the reason why that happened, I'll show you right now. The first set of losses came in on the NASDAQ. I only did NASDAQ with this. I took a couple of trades on Euro, but I'll explain that shortly. And this is where my entries were. I was effectively looking for the short because NASDAQ was starting to show some interest. Now, what I was waiting for was NASDAQ to come down and tap the whole and half number zone, which you can see down at the lows right here. Now, because of the size that I was using, this little move here effectively cost me 30 racks. So let's go and look at the sizes. I was using 189 lot sizes in the first instance. Then I loaded up with 455 lot sizes, then another 455 lot sizes. Okay. Loaded up again on a buy, lost there on 455, and then I lost there as well. All right. So the first few trades from 5:15 going straight through to that zone right there, that loss right there, literally 4 minutes, lost 30,000. That's how quick you can lose when you're using sizes like this. And I could have lost the account, but I was monitoring what was going on. I was in the zone. And I said to myself, if I've got a boundary of $50,000 that I can lose, as long as I've got a buffer of 20 afterwards, if I lose 30 or 3% on this trade, then I've got to effectively recuperate it. Otherwise, I'll blow the account. Now, I was waiting for it to drop. Had I kept the trade on, so if we look, had I kept the trade on from where I closed, I would have seen the success of the trade and I wouldn't have taken the loss. It would have been a win. Now, what I did, if you notice, I opened a couple of more shorts here. So I went in for the short, quickly recuperated those shorts. And that's where I loaded up on the size here. Sell, sell, and sell. So I made back about 5.5 grand inside of that little sell zone right there. So what I did was, once I took the loss to 30,000, so I lost the 30,000, I reduced my available risk by adding another 5,000. So I moved up to 25. So I was like, okay, cool, because I lost 30, which left me with 20, and then I've just earned myself another 5,000 on the risk. And when I was watching this happening, I was like, I know NASDAQ is going to move back up. All right? That's why I didn't allow the idea of the challenge to affect me. I didn't allow the idea of loss or feeling deflated that I lost 30,000 on the value of the account to deflate me. It was all psychological. I knew that once they tapped that zone, I'd be getting ready to run longs. Okay? As you can see, from that point, I started loading up longs inside of here, and I took very quick scalps. So $2,000 there, $2,500 nearly, $1,300 there, $1,800 there. I didn't let it do nothing. I was trading into the momentum. So now I managed to build up the balance again. So I got back up to nearly 30. So I was like, okay, cool. So now we've got capital now. All right. I got to try and make it back. As we go into the chart, you can see these positions here. Those positions right there where I started to run the longs on the buy side, right? Where is it? From here. See the scalps? Those are the scalps inside of that zone. Very small amount of movement, but a lot of capital put up and earned. This is where I started to get the size. 26,500, 26,450, 26 and 26. All right? Those wins right there were effectively from here. Now, look at what had happened. Took the long. It went all the way up. All right? And I added to the position because I believe NASDAQ was going to bring the flavor. We zoom out. Opened the long from here. Could have closed it much more higher, but I didn't. But I managed to recuperate the loss. So I was like, okay, cool. I'm much more comfortable now. I'm back into my boundary. So that's where you see on here where the account started to climb back up again. Okay? Took the big move up. Those were those little scalps. Took the big move up. And that's where we won on these $26,000 moves here, the four positions. So nearly $100,000 on that move. Okay? Which puts us into this area here. Then afterwards, it started to drop down. All right? So we then go into the charts and you can see. Look at my entries here. Now, at this point, I changed my size. So notice, I went from the 455, because what I wanted to achieve was I wanted to achieve a big win so that I can then get closer to the success of the account by using smaller size. I was already used to using 100 lot sizes when I trade NASDAQ anyway, so that's fine. So I started to bring it back into a realm of where I was normally comfortable, where I started to get a bit confident and taking my trades. Now you notice 188, 188, 188, 188 in lot sizes, then 100, 100, 100, 100, dropped it down to 178. And you can see I had a succession of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, $15,000 loss, which was this area right here. Okay. Now, what was going on was simple. I was anticipating that NASDAQ was going to come back down to recover some of these zones. But because of the way NASDAQ moves, it always has this tendency to do snap reversals. And that's exactly what had happened. They gave me the snap reversal back up, got shaken out of my shorts. I went to try and run some longs in there, didn't close it in time, came back down, continued with the narrative of playing the shorts. So these were longs, lost those longs, vector candle, brought it all the way down. I don't know why I held on to that because I expected from that point that I would get a bit of a reversal. It didn't happen. I then watched the delta on NASDAQ on the XO charts and I realized that they were going into imbalances, which is what led price to go down here. So I quickly scalped again and then effectively changed direction and started to repeat the same scalping process inside of this zone. Notice how NASDAQ, after dropping, eventually then came back up. And I capitalized on that. Could have took some money off the table, but I didn't. All right? Going back into the positions themselves, you can see that my losses, in all honesty, although each position is equating to all of this, was for $15,000 loss. I kept my exposure to a minimum. Okay? Look at these. 80. I'm losing 178 lot sizes. 80, 80, 101, 311, 154, 222, 178, 178, 156, 1,000, 1,000. Okay? I kept my risk. I didn't take no shit. If I didn't like it, I was out. If I started to get a feel for the way price was moving, I was out. And that's what this zone is right here at the top. Okay? Now, this is where it gets interesting. Here's the gap. So, this gap trade, this is where I started to go back into my sizes and keep it methodical. I kept it from 178 going into 178, going 178. I kept the lot size exactly the same after I had achieved the big play right here. I did not use 455 lots afterwards. I just opened more positions of 178. Okay? Now, the gap. The gap play worked out well, but I didn't close it. I added some more positions here. Could have closed it up there, didn't. I was waiting for them to close the gap. Now, you look at it and you say to yourself, well, hold on a second. Why did you close here? What was the story about you closing at this point and then opening up here? Because what had happened was I had gone to bed because it was about 3 o'clock in the morning. I'd gone to bed. And believe me when I tell you this, I looked at my phone when I went to sleep. After I closed the positions, I looked at my phone and I said, they're going to fill that gap. It's NASDAQ. Literally within 3 minutes of closing the trade, I reopened again and loaded up on the size. I added more positions. And that's when I started to see the big plays. I opened a position here at the lows, so NASDAQ was smacking down on the delta, aggressively hitting it lower. The delta was showing in negative figures. Then there was a pause in the delta. And the example of the pause, as you saw earlier on today, where it starts to go -8, -9, -10, and then -2, delta slowing down. That's where I took the risk. Hybrid system, violet vector candle inside of that zone. I've got a gap in the chart right here. I've got a whole number principle over there. It was going into the Asian session as well. They had just aggressively sold off. I'm only expecting them to try and move up. And that's when I added the positions here, added those positions, added there. In the end, I ended up closing everything inside of this zone. Now, I don't know why it does these lines right here. I was opening and closing trades in this area here as well. I don't know why it's doing that. Okay. Here are positive trades, me riding the move back up because here was a vector candle zone. So I took advantage of those longs and started loading up on the longs on the NASDAQ. Okay. Now, given that I've just shown you the trades, some would look at this and say, yo, man, that is just crazy. You know, look at the risk that you're taking. Yes, but just look at my losses. My losses start to get a little bit smaller. They are all within the boundaries of what they give you. Okay, 7,007, 6, 6, 6, 5, 4, 4, 3, 3. Okay, these were the wins. -2, -2, -2K. All right, just look at my losses and then look at my gains. They're all nice and even in essence. I'm keeping the risk to a minimum. Okay, we look at the statistics of the actual account and then we say to ourselves, all right, then, so what's this? We started off with the deposit right there and in the succession of 142 trades. So if I just bring this out, zoom in, this is what we got. We got 142 trades. Profit factor 2.85. That's decent. Okay, so every pound I risk, I'm earning £2.85 or $2.85. All right. Expected payoff is relatively decent. Shorts won 51%, well, 49%. Longs won 65%. Profitable trades, nearly 60%. Loss of trades, 40%. So it's like a 60-40 win ratio. Some will say 60%. What the fuck is that? Where's your 80s and your 90s? Don't need it. Look at the equity curve. Just look at the way the curve is operating. This is controlling risk. This is controlling exposure. Then you get a win, bang, pushes it up. Controlling the exposure, push up. Controlling the exposure, push up. Okay? So then you say to yourself, okay then, like, what's the best way that I can approach funded programs when I'm dealing with a specific a monetary amount of money that I have to stay within. Like I said, when you start risking or going into even a $200,000 account or a $50,000 account, the problem that most people have with the funded programs and why so many people fail them is because they're dealing with capital that they're not used to dealing with. There's a different psychology that you have to have when you're trading with $1 million, $200, $50,000, even $10,000. The retail market is all about just deposit $100. That's the minimum amount you need to trade. So people are just continuously depositing $100, $500, $400, all right? And they do that over a period of 6-7 months. In the end, it ends up being to the total of $10,000. And they've realized that they've lost that amount of money. But how do you help yourself overcome the idea of using, because look, do I recommend that you start $1 million challenge and start using these same lot sizes? No, I do not recommend that. I don't. I'm risk. I take on the risk. I've sat in these situations many a times. I'm used to using 188 lot sizes, 400 lot sizes on various assets. I know how to behave. I can take the loss in real terms, $4,000, $9,000, $8,000 loss. I'm used to it because I've experienced that progression in trading where I started off at 0.01 lot sizes and worked my way up to 1 lot, to 10 lots, to 20 lots. Okay? When you're doing these funded programs, your goal is not to make money. It sounds stupid, but your goal isn't to make money. Look, if my profit factor was shit, then you'd say that I got it on a luck, that I just brought once and then it all went up, happy days. But over a period of 142 trades, it's a decent sample size, in my opinion, for 2 days worth of trading. My equity curve, with the exception of the drawdown here, these zones right here is where I'm dropping my size and executing the same thing over and over again. I have to think of it systematically and objectively. Is it going in my favor? Right, take a trade. Up it goes. Cool, take some profit. That's where you see these little trades here, 2,000, 2,000, 1,000, 1,800, okay? These trades right here where I took the loss, I took a move, it didn't work out, but it was right if I just if I took the patience and I said to myself, wait until it happens, then you'll be able to see the success of it, which was this area right here. They went down. I was correct with my methodology. I was correct. I wanted the short, but they just shook me out. That's what NASDAQ's about. They shake you out. Now, looking at it in retrospect, I could have taken the short after they recovered the vector. I knew they were going to do that. I just took the loss and said, right, that's it, I'm wrong. And then I started to see it break down, so I took advantage of a momentum trade, and it continued, and then I closed off. I needed to recuperate the loss that I had just experienced from the first 4 minutes of paying for the bloody account. I lost 30,000, 3% of the initial amount that they allocate for you when you are going into the actual challenge itself. Okay? These little drops right here is where you're controlling your exposure. You grab the right part of the move, bang, it moves you up a level. Do the same thing again. Right, here, look. This is controlling risk. It's not a chart that's like this, guys. It's not like this. Trading can be like that. But this is what you've got to recognize. These zones. These are what you want to avoid. Get as many of these as you can. But it's the big drawdowns that you get that will be a problem for you. Okay? To achieve profitability in trading, you really want to be aiming for a nice curvature like this. Pump, you've caught the right move. Pump, you've caught the right move. Sometimes it goes like that. You go down on a little bit of a drawdown and then pump, it comes back up. It's these zones that make you as the trader because you're exercising correct risk management. You're not trading emotionally. You're not setting yourself up for failure. Having these sort of experiences where your equity curve is shoot up, shoot down, shoot up, shoot down, no wonder you lose your mind. All right? When you're dealing with the funded programs, come to the chart. Let me go back into it. Come to it and set yourself a goal. The goal, of course, is to get to the blue line. It might sound stupid, but get yourself to the blue line. Stay away from the red line. All right? You hear about people using different colored candlesticks because psychologically it can put an impression on you. For example, some people will get rid of green candlesticks and change them to blue or, yellow, and change the red candlesticks to like silver or purple because green and red tend to have a subliminal impression on people and it can make them do the wrong thing. Like see a red candlestick, oh my God, and think the worst of things. When you're trying to grow a funded account by trying to stay within the parameters of risk. Just because it's $1 million account, just because it's a $200,000 account, doesn't mean that you have to use more capital. You keep it down to the minimum until you start to get comfortable. That's what I did. I started off. Because I'm used to doing these funded programs. Happy days. But I started off with bigger sizes, okay? Now I tripled up, nearly doubled up the size on here, and I paid the price. Okay, let's go back to normality. Took a big win right there. Then switched it back. And then I went back to the normal sizes. All right? Quick losses. 1, 2, 3, quick, in, out. $80, easy. Took me a second to make that $80. All right? Fast in, fast out. There you go. What was that? 22.57, 23.02. Cool. $80 there, $80 there. Happy days. Another one. What was this? 23.14, 23.17. All right? $1,000. Done. Quick. No messing about. Then again here. Look. Minus 23.21. And we got in at 23.20. So within 1 minute, and guys, it wasn't even a minute. Look. 23.20, 23.21, and 21 seconds. All right? Not even a full minute. Lost 1,000. I wasn't taking any shit. I was in and I was out. That's what scalping is. Right there. Those short times. Okay? That's how you maintain the equity curve to keep consistently in a tight range until you grab the move and then shift out. If you've caught the move correctly, it will then go in your favor. But you've got to keep your exposure to a minimum. So when you are looking to trade, your goal is to manage these areas, not these. These look after themselves. This area here, that happens. It looks after itself. You've caught the momentum, it's going to fly. But it's when you're trading and it's going up and down against you, and you can get a bit deflated. But you know that if you're executing your system correctly, you know that you're going to grab the move. Why? Here's an example. Good old BTC today. All right? Look what it did. They brought it up. Gave you guys the heads up in the Discord just before this candlestick started. Start taking some partials. We're at the psychological levels. And they've just fully recovered the whole thing. Exactly what we would expect them to do. These situations here, where you capitalize, take your money. Don't bank on the hope. There is no hope in trading. There are no prayers in trading. That's not how you pass programs in these prop firms. You pass them by sticking to a system. You keep your risk to a minimum. And know that as you execute it, you know you're going to come out on top. That's how you achieve these equity curves where you get the sideways price action, like so, and then when you catch the move after you've executed it correctly, you get the momentous play. Going back into the actual trades themselves. That right there, caught the move. It took a while. It's been a horrible day for trading NASDAQ that day. It was horrible. But look when it was trading. Pumping, coming to fill the gap. Happy days. Caught the move. Deviation away from the moving average. Awesome. Could have closed up there. Didn't close. I added. Momentum was going to pick up. They were going to fill that gap. Take the previous liquidity over here. Cool. Big push. Happy days. Add to it again. And then the rest is history. That's what you've got to try and do, guys. People get intimidated by these funded programs thinking, oh, wow, now I've got access to £1 million. I'm going to trade it. I'm going to stick to it. I'm going to do all of this. Yeah, cool. They give you the 50,000, all right? Because in principle, that's 5%, all right? 5% on $1 million. Okay. So why do people fail them? The reason why people fail these programs, guys, is because they're not factoring in the risk. Okay? If they're swing traders, they put up some of the risk. They look at that 50,000 and think, nah, I ain't going to lose that. Nah, no chance. Or even on a $200,000 account, I ain't going to lose that 10 grand or 9 grand, whatever it is. I'm not going to lose that. I'm going to stick to my strategy. When they start seeing a bit of a loss, they don't like that they're actually going below the balance. They want to be going above it. Then they start getting emotional. When you start playing with these funded programs, it really does put you to the test on managing the risk. If you know part of the hybrid system and you trade a certain way on the hybrid system and a specific structure that you look for, you wait until that structure is forming. Then when you take that structure and it works, you take the money, you run. When it doesn't work, fine, look for the next structure because that is what is going to be here. Right here, this area, the secret word behind this area is variance. Variance is your friend and your enemy. If you have a system that says over a sample size of 100, 200, 300 trades, and if you can have a system that says 70% of the time you're going to win, 30% of the time you're going to lose, your job is to manage the 30%, not the 70, because the 70 looks after itself. The idea is that when you are encountering a time in your trading where it's not working out for you, you drop your size. You get rid of the size that you're used to. It doesn't change anything. You're still in the you're still in the actual funded program. Just manage the risk. And it sounds stupid and shit when I say this, okay? But there's only one thing to do. When it's not working in your favor, take the loss. Always say to yourself, give me a reason to get out. Look at today with NASDAQ. All right, here's a classic example. If you watch that live stream, look what was going on here with NASDAQ on the 1 hour time frame. Where was it? What was it actually? Where's that zone? That red vector candle, what was it? Was it in the 15-minute time frame? Yes, look at this. This is classic NASDAQ, okay? When they were dropping price so aggressively, what time was it? It was in this area here. They were dropping price, dropping, and you could see that my account was going crazy, all right? Was it the 4 hour? What time frame was it on? Was it a 5 minute? Hold on. There you go. It was the 18-minute time frame for some reason. I thought I selected 15. It was 18. But notice how the red vector candle was coming down. They were smacking price. And I said, look, I don't trust it. I know what NASDAQ's like. I've got this idea. They're going to snap reverse and bring price back up to the VWAP. And because I was using one contract, okay, I was able to have the freedom to sit through the drawdown, to sit through the stop run, because I was in tune with how NASDAQ was behaving. They aggressively marked it lower just after 3 o'clock, went for the liquidity, then instantly reversed it back up. Could have been wrong, and I needed to see them break down beyond this zone right here. Then I would have said, that's it, I'm done. Because then they would have tapped the liquidity here. I wouldn't be taking that trade. I'd be closing it. But I was reading into the delta. We were watching it all together. And that was an example right there of executing the psychology of when market maker is trying to make people believe something that is getting ready to be set up for something else. What does he try and make retail do? That's what's the question in your mind all the time. He was making retail go short. Everything was dropping. NASDAQ's taking a shit quickly. Go short, go short. And he was getting the commitment. That's the perfect time to reverse it. We were in tune with that. We saw the delta started to slow down. Okay? So when you are actually coming to the charts and experiencing these things, you have to go back to the system. Whatever system you're using. You can't trade emotionally. And it's hard saying that. But you saw today, I could have taken the loss and carried on about my day. I would have recovered it, but I didn't have the time to trade. So all I needed to do was wait to see if the proof was in the pudding about the read on the market. And that is what had happened. We read it correctly. We saw the manipulation and they played it to a T. Happy days. Look what they did from that. Shift out. So when you're getting ready to do a funded program, come away from the idea of, oh, I want to just be a funded trader and I want to, I want to stop my work and it'll be the lifestyle and all of that. No, it's taxing, ladies and gentlemen. It's hard because then you'll have to sit through these situations right here. I could have closed that and would have lost $1,600 profit that I can cash out. That would cost me $1,600. I already made the money in the morning. I took a trade and then I could have lost it. And that's the reality of it. You have to aim to be trading the system. Aim for execution. Do not aim for the money. Aim for the execution. Because I promise you, they'll do a red vector, they'll come and recover it. They'll do a green vector, they'll come and recover it. They'll move away from the 50 EMA. Tell me something that I have not said to you before about the hybrid system that you haven't seen happen. Look, move away from the 50 EMA. Cool. There you go. Delta's picking up in there. It's picking up in there. Vector candles inducing traders to go short. Happy days. We've got a little bit of an imbalance there. Wait for them to stabilize. Delta changes in this point. The selling off has started to slow down. Green delta comes in on this one. Take the trade, shift out. Trade back to the 50. Just this little thing right here, guys. I'm focusing exclusively on that. Can pass challenges. It will pass challenges, straight up. You've got to try and find that point in the chart. Here you go. Here's an example. It drops, it drops, it drops. You take a long inside of that zone. Takes a little while to get to it. Bang, it makes the move. Cool. Once you see the first bout of volatility to the 50, cool, close it, off you go. Right? Find another instance when you see volatility coming in. Look at this. Drop, 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 drop. Set your stop. Keep within your risk parameters. Make your long from here. Cool. And then what? Trading into the moving averages. Cool. Starts to climb. Big vector candles. Happy days. You're making money. Cool. Take your profit at the 50. And if you're confident, add to it and then trade up again. Just that little structure right there. Find your box. Happy days. There's volatility. There's imbalance. Cool. We're going to trade back into the imbalance. Yeah? Here's another example. Moving averages are fanned out. Look. All right? 50 EMA is too close to price. But principally, there is a big imbalance in the chart. Green vector candle zone right there. Happy days. Taking your shorts. Bang. Ripped it back down again. back into the moving averages before they stabilize. Again, right here, look. Boxed off, big move to the upside. Take your short inside of this area. You may not see that much success. But then eventually it tries to go down. Back into what? Vector candle recovery zones to the T. Look at that. Despicable. It's about which system you decide to execute and focus exclusively on that execution. Come away from the end result because you're not here for the end result. You're here for the process. You're here to execute the process every single day, one step, one trade at a time, and get the feedback. Do not take trades so that you can be the trader of the family and just be like, happy days, yeah, I'm funded and all that. You want titles? Well, just tell people that you're a funded trader and leave it at that. You don't even need to do a funded program. You've got to try and focus on the execution. And I say it all the time. And I know it can be hard, ladies and gentlemen, especially with new people that are coming in and they want to learn the system as fast as they can. You've got to put in the screen time and find one aspect of the hybrid that you think will work for you. And then try and replicate that and see it happening over and over again. And then take small trades. Execution is your priority, not the money. Forgive me if you feel like I'm shouting at you guys, but I really want to get it to hit home so that you understand where I'm coming from. Mad love and respect. Peace.